Everyone expected China to strike back, but no one expected they'd target America's farms directly. The U.S. recently increased tariffs on Chinese goods. Washington anticipated retaliation, but instead of going after tech, manufacturing, or finance, China targeted agriculture. Why does that matter? Because agriculture isn't just another sector, it's one of America's key economic weapons. The U.S. exports over $150 billion in agricultural goods annually. China has been a major buyer, and now that door is rapidly closing. This isn't just about money. It's about pressure. China isn't just hurting the U.S. economy. It's striking at the core of rural America. Why? Because that's where Trump's strongest support base is. If farmers start struggling, the political pressure shifts, and that's exactly what China wants. And here's the big question. Is this just the first move, or is China gearing up for an all-out trade war that the U.S. may struggle to win? If there's one factor that makes American agriculture powerful, it's exports. And China just placed that entire system at risk. Here's why this is a big deal. The U.S. doesn't just feed itself. It feeds the world. More than 20% of all American-grown crops and meat are sold abroad. And China? One of the biggest buyers, until now. China knows exactly where to strike. Soybeans. The U.S. exports millions of tons to China annually. Corn, beef, pork. All major U.S. exports now face uncertainty. If those sales vanish, farmers don't just lose profits. They risk losing their entire market. And here's where it gets worse. Crops can't just sit in storage indefinitely. If China stops purchasing, supply builds up, prices crash, and farmers take the hit immediately. China is playing the long game. They're not merely cutting U.S. imports. They're ensuring America's strongest trade asset loses its power. So the real question, does the U.S. have a backup plan, or did China just expose the biggest weakness in America's economy? If the U.S. assumes China still relies on its crops, it may be facing a harsh wake-up call. Because China already has backup suppliers, and they're moving quickly. Here's what's unfolding now. Soybeans. Brazil and Argentina are already stepping in. Corn. Russia is ramping up exports directly to China. Meat. China has been strengthening its own pork and beef supply for years. This isn't the 2018 trade war. Back then, China still depended heavily on U.S. soybeans and grains. Now, they've spent years securing alternative suppliers. Cutting off U.S. agriculture stings far less than before, and that's a serious blow for American farmers. And here's the looming issue for the U.S. If China fully transitions to alternate suppliers, those contracts don't just return overnight. Brazil, Argentina, and Russia are prepared to secure that business permanently. Losing a tech deal? You can pivot. Losing car sales? Offer discounts. But losing agricultural exports? That's a crisis that can't be resolved overnight. Here's why. Tech companies can adjust production, expand markets, and innovate. Automakers can cut prices, redesign models, or explore new customers. But farmers? They can't just delay a harvest. Those crops are already planted. If China stops buying, the impact is immediate. Farmers still need to sell, and without buyers, prices crash. Supply chains aren't built to change course overnight. Losing a major buyer leaves products sitting with nowhere to go. Once foreign markets replace U.S. crops, those deals are hard to reclaim. And the bigger picture? A supply glut hurts all farmers, not just exporters. Commodity prices plummet across the board, even for products China wasn't importing. Farms close, jobs disappear, and rural economies suffer first. This is why China's move stings more than any tariff war on tech or manufacturing. It's not only about losing sales. It's about crippling an industry that requires years to rebuild. So does the U.S. have a counter-strategy? Or did China just identify the ultimate economic pressure point? If China is willing to halt billions in U.S. agriculture, what's next? Because this may not end with soybeans and corn. Here's where things could escalate further. Energy exports. China still imports U.S. liquefied natural gas and crude oil. Cutting those purchases would destabilize energy markets. Aircraft deals. Boeing depends heavily on Chinese buyers. Any reduction here could harm the U.S. aerospace industry. Tech components. China continues to import semiconductors and high-end machinery from the U.S. Reducing those orders would squeeze tech companies. This isn't just about crops anymore. China's strategy is clear. Make the trade war felt where the U.S. is most vulnerable. If agriculture doesn't force Washington to reconsider tariffs, Beijing has even more leverage to apply. The real concern: how far will China push before it feels the pain too? And that's where the stakes rise, on both sides. The U.S. can absorb losses in some industries. But agriculture and energy, those are billion-dollar markets. China also relies on key U.S. exports, particularly in advanced technology. If this escalates into a full-blown trade war, it won't just be farmers suffering. Neither side is backing down, and at this point, it's no longer about exports alone. The trade war is evolving into a larger economic battle with global consequences. Here's what's unfolding now. China is aggressively replacing U.S. suppliers with new long-term deals from Brazil, Argentina, and Russia. The U.S. is pressuring China, but it's also risking its own industries. Other nations are observing closely. If China successfully bypasses the U.S., more countries may follow. This is a turning point. If China reshapes its import strategy, this isn't a temporary setback. It's permanent. So, did China outmaneuver the U.S., or is this a short-term win that could backfire? Share your thoughts in the comments. And as always, we'll see you in the next one.